Here are the crypto top headlines covered in this video. Grayscale launches investment fund for AVAX token. Next, Bitcoin Parabolic rally may start in Q4 according to historical price data. Also, crypto asset managers look past the next big coin to diversify portfolios. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Grayscale launches investment fund for AVAX token. It joins Grayscale's suite of more than 20 crypto investment products. Asset manager Grayscale Investments launched a new investment fund for Avalanche's native token, AVAX, according to an August 22nd announcement. The Grayscale Avalanche Trust offers investors the opportunity to gain exposure to Avalanche, or AVX, a three-chain smart contract platform designed to simultaneously optimize for scalability, network security, and decentralization, Grayscale said. Avalanche is a Layer 1 blockchain network with a focus on facilitating real-world asset, or RWA, tokenization, which involves converting tangible assets, such as real estate, commodities, or fine art, into digital on-chain tokens. On August 22nd, Franklin Templeton expanded its blockchain integrated money market fund to Avalanche. Grayscale's Avalanche Trust allows investors to participate in Avalanche's advancement of RWA tokenization, including through its key strategic partnerships and unique multi-chain structure, Rehina Sharif Askari, Grayscale's head of product and research, said in a statement. The fund, which is not exchange traded and is only available to qualified investors, adds to Grayscale's suite of more than 20 crypto investment products. On August 13th, Grayscale launched a trust to invest in MakerDAO's MKR token. On August 7th, Grayscale launched two other trusts to invest in Bitten Sensor's and Sui's native protocol tokens. Grayscale is the world's largest crypto fund manager with upward of $25 billion in assets under management. It is best known for its Bitcoin and Ether exchange-traded funds, including Grayscale Bitcoin Trust, or GBTC, and Grayscale Ethereum Trust, or ETHE. Grayscale also operates private single-asset funds for other protocol tokens, such as Basic Attention Token, or BAT, and Chainlink, or Link. During an August 12th webinar, Dave Laval, Grayscale's global head of ETFs, predicted that the market for cryptocurrency ETFs will expand to encompass new types of digital assets and diversified crypto indexes. We're going to see a number of more single asset products and then also certainly some index-based and diversified products, Laval said. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin Parabolic rally may start in Q4 according to historical price data. Q4 could be a blockbuster moment for Bitcoin's price as a multi-year historical price trend holds up. Bitcoin had a good start to 2024, rising over 40% year-to-date. This was fueled by a number of positive fundamental factors, including the launch of spot Bitcoin exchange-traded funds in the United States and the halving event, which reduced the amount of BTC awarded to miners by 50%. Unlike previous cycles, Bitcoin price hit new all-time highs before the halving, leading many analysts to predict a supercycle within the current halving year. More than 123 days have passed since the Bitcoin halving, and BTC's price is yet to surpass its pre-halving all-time high. Bitcoin is down 13% over the last month and 14% over the last 30 days. This has left market analysts debating whether Bitcoin will launch a rally during the fourth quarter of 2024. Veteran trader and analyst Peter Brandt said that the current market cycle could soon be the longest in post-halving history, adding that it could either indicate that a new all-time high will take longer to come or it's not in the cards. Data from CoinGlass reveals that Bitcoin has always had positive returns in Q4 during halving years, posting 58% and 168% gains in 2016 and 2020 respectively. Moreover, BTC's price has posted positive returns in 8 out of the 11 years between 2013 and 2023, with average gains of 88%. If history is of any guide, there is a 73% chance that Bitcoin will rally in the fourth quarter of 2024. CryptoQuant founder and CEO Kai-Young Ju analyzed Bitcoin's price action during the 2020 halving and found that the rally began in Q4. In the last Bitcoin halving cycle, the bull rally began in Q4. Whales won't let Q4 be boring with a flat year-over-year performance. According to Ju, Bitcoin's price is in accumulation phase, suggesting that it could possibly initiate a parabolic uptrend once it enters the last quarter of 2024. The 200-day EMA poses stiff resistance for Bitcoin's price. Data from Cointelegraph Markets Pro and TradingView shows Bitcoin's price action has formed a series of higher lows on the daily chart, but has remained below the 200-day exponential moving average, or EMA, over the last 7 days. The in out of the money around price, or IOMAP, model by Into the Block reveals that Bitcoin faces relatively stiff resistance in its recovery path compared to the support it enjoys on the downside. The 200-day EMA at $59,423 is found close to the $59,500 to $61,300 price range, where approximately 817,770 BTC was previously bought by around 1.51 million addresses. This suggests that high demand-side liquidity is required to push BTC's price past the 200-day EMA and later above resistance provided by the 50 and 100-day EMAs at $61,383 and $62,323 respectively, breaking it out of the current consolidation. If this doesn't happen, analyst Mark Cullen said Bitcoin's price could drop toward $57,500 or even lower to revisit the $54,500 level. Our next top headline: crypto asset managers look past the next big coin to diversify portfolios. The next innovation in cryptocurrencies will not come from the introduction of a Solana exchange-traded fund. Asset managers say they are more focused on other ways investors can diversify their portfolios with crypto. The launch of the highly anticipated Bitcoin ETFs in January was a success, but many are wondering what is next for the industry. Some crypto enthusiasts are speculating about which coin will next be put into an ETF wrapper, with many speculating it could be Solana, but asset managers at the Wyoming Blockchain Symposium in Jackson Hole say the search is about more than that alone. As we think about how to educate investors about this broader ecosystem, it's not individual token by token, but rather how do we think about portfolio construction, and from there, how do we create exposures representing different sectors within this growing ecosystem, said Cynthia Lowe-Bissett, head of digital asset management at Fidelity Investments. There's an opportunity for us to be able to add value beyond just individual access to just some of the largest crypto tokens. Actively managed products. Steve Kurz, global head of asset management at Galaxy, pointed to his firm's recent partnership with custody giant State Street to develop active trading products. That is not about the next coin. It's about the 75 securities that are now linked to crypto, the fact that there are futures, options, crypto ETFs and all kinds of exchange-traded vehicles globally, he said, "The accordion has expanded so much in just 1 year that you can start to have active strategies. While that's not what I think the average crypto asset manager would say that path would have been, that is a path that brings crypto awareness and crypto education through a different set of tools," he added. Outside the U.S., investors can buy the CoinShares Physical Staked Solana ETP, for example. ETFs tracking the price of spot Bitcoin were available in Canada in 2021, long before they were approved in the U.S. Diversifying portfolios. Diversifying crypto exposure beyond focusing on single coin products could be key for some asset managers. There are 11 Bitcoin ETFs now available in the U.S. that, aside from their fee structures, look more or less the same for most investors. If you're looking at the profitability of the asset management business in a platform sense, over the next 3 or 4 years, it's about moving into alternative products, Kurz said. Hedge funds, liquid token funds, venture funds, those are all models that are being tested. Investors and wealth managers who are comfortable in Bitcoin generally recommend a small allocation between 1% and 5% to add risk to a portfolio without subjecting it to too much of the cryptocurrency notorious volatility. Having different crypto-linked securities coming to market, however, could give asset managers an opportunity to shake up that standard and lift client expectations. Active management becomes part of the conversation, and your differentiation isn't on fees or total cost of ownership. It's now on what strategies are you creating, what alpha are you generating, and that's when we know we've actually achieved something in terms of it becoming an asset class, Kurz said. You really haven't had a true asset management industry in crypto. It's been a cottage industry until the Bitcoin ETF happened, he added. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.